Every single day in this country, families discover something about their loved one's bank account that nobody warned them about. Not the solicitor, not the financial advisor, not the bank itself. The account is frozen. Every direct debit stops. Every standing order stops. The mortgage payment, the utility bills, the care home fees, the insurance premiums, all of it stops. And the family standing at the counter with a death certificate in their hand is told they cannot touch a single penny until a legal process that can take between 4 months and 2 years has been completed. That process has a name. It is called probate. And in 2026, the average time a UK bank account sits completely frozen while probate runs its course is 6 months and 3 weeks. For 1 in 5 estates in this country, it takes longer than a year. For a small number of families, it has taken 3 years or more. I am John Hartley. This is Money in Retirement. And what I want to do in the next 20 minutes is walk you through the exact legal steps that mean your account does not have to work that way. Steps that the banks understand perfectly well and will never explain to you unprompted. Because the system as it currently stands benefits from your silence in ways I am going to make very clear before this video is finished. Before I go any further, I want to address the assumption that most people bring to this subject. Most pensioners watching this believe the account freeze only happens to people who did not write a will. That is wrong. A will does not prevent the freeze. A will tells the court who gets the money eventually. It does not tell the bank to release it immediately. An account can be frozen for the better part of a year with a perfectly valid will sitting in a solicitor's drawer, and there is nothing the executor named in that will can legally do to speed up the process unless one or more of the specific arrangements I'm about to describe are already in place. The second assumption is that this only becomes a problem for very large estates. That is also wrong. The freeze applies regardless of the amount in the account. Whether your account holds £40,000 or £400, the bank will not release it to anyone other than a joint account holder until the legal paperwork is in order, and for families who were relying on that account to cover funeral costs, to keep direct debits running, to pay the rent or the council tax or the energy bill, the timing of that freeze can cause financial damage that far outlasts the grief itself. Let me show you exactly what happens the moment a bank learns that an account holder has died, because understanding the sequence is what makes the rest of this video make sense. When a death is registered in England and Wales, the information flows to a central government notification service called Tell Us Once. Most families use this service at the register office immediately after registering the death because it notifies multiple government departments in a single step. What most families do not realize is that Tell Us Once also notifies banks and building societies that have signed up to receive those alerts. And the moment a participating bank receives that notification, the account is frozen automatically. Not reviewed, not assessed, frozen. The software does it without a human making any decision at all. The account holder's card stops working. Scheduled payments queue up and fail. And the surviving family members, who may have been using that account for household expenses for decades, suddenly find themselves locked out entirely. The banks are legally required to do this. It is a protection measure designed to prevent fraud on accounts belonging to people who have died. That part of the system works exactly as it should. The problem is not the freeze itself. The problem is that almost every pensioner in this country has made no arrangement whatsoever to ensure that the money their family needs in the weeks immediately after their death is accessible, without waiting for probate. And the result is that families across the country are routinely forced into debt, forced to borrow from relatives, forced to use credit cards to pay for funerals, while perfectly adequate savings sit completely out of reach inside a frozen account. There are 4 arrangements that change this situation completely. 4 things you can put in place before anything happens that mean the people you care about are not left standing at a bank counter being told to wait. I am going to take you through all 4 in detail. I am going to tell you which one applies to your situation. And I am going to give you the exact words to use when you contact your bank or your building society this week to get each one set up. Here is the first arrangement. It is called a joint account, and it is the most straightforward of the 4. If you hold a bank account jointly with another person, whether that is your spouse, your partner, or in some cases an adult child, the account does not freeze on your death. The surviving account holder retains full access immediately. No probate required, no waiting period, no frozen funds. The money is available the same day the death is registered and the bank is notified, because in law a joint account passes automatically to the surviving holder by what is called the right of survivorship. The bank does not need a grant of probate. It does not need a solicitor's letter. It needs the death certificate, and in most cases the surviving holder can present that at the branch or upload it through the bank's bereavement portal and regain full control within 48 hours. The financial consequence of not having this arrangement in place is significant. The average funeral in England now costs between £4,500 and £6,000. Cremation services at the lower end, burial with a service at the higher end. None of that can be paid from a frozen soul account. If the family cannot cover the funeral from their own separate funds, they face the choice of borrowing or applying to the local council for a funeral expenses payment, which comes with its own application process and means testing. All of that is entirely avoidable with a joint account already in place. What I tell every pensioner who asks me about this is the same thing. If you have a sole account and there is another person in your life who would need access to your money in the weeks after you die, contact your bank this week and ask them what is involved in adding that person as a joint holder. The process is straightforward at every major high street bank. Both account holders attend the branch together with identification documents, a process that takes under an hour. And from that point forward, the account operates as a joint account with both holders having full and equal access. There is one important thing to understand about joint accounts before you set one up. The moment a second person is added as a joint holder, they have full legal access to the funds immediately, not just after your death, but right now, today. That is not a reason to avoid the arrangement. It is simply something to go into with clear eyes. The joint holder you choose should be someone you trust completely, with access to your money during your lifetime as well as after it. Here's the second arrangement. It is one that the vast majority of pensioners in this country have never heard of, and it is the one that I believe matters most for people who do not want to convert their account to a joint account for whatever reason. It is called a nominated beneficiary instruction, and not every bank offers it, but more do than most people realize. A nominated beneficiary instruction is a written document held on file at your bank that names one or more people to receive the funds in your account directly upon your death without going through probate. It is separate from your will. It does not override your will for the purposes of your wider estate. It simply instructs the bank to release the funds in that specific account to the named person as quickly as the bank's own bereavement process allows, which at the banks that operate this system is typically between 5 and 15 working days, rather than the 4 months to 2 years that probate adds. The reason most people have never heard of this is that banks do not advertise it. It is not on the front page of their website. It is not mentioned when you open a current account or a savings account. It sits in the bereavement section of their policies, a section that most people have no reason to read until a death has already occurred and it is too late to put anything in place. The banks that currently offer some form of nominated beneficiary or expression of wishes arrangement for standard accounts include several of the major building societies and a number of the high street banks. The specific name varies. Some call it an expression of wishes. Some call it a payable on death nomination. Some call it a bereavement preference form. Whatever the name, the effect is the same. You fill in a form, you name the person or people you want to receive the funds, you sign it, and it goes on file. Your account continues to operate exactly as it did before. The only thing that changes is what happens to the balance on the day your bank learns you have died. The action to take this week is to ring your bank or building society and ask them directly whether they offer a nominated beneficiary instruction or an expression of wishes for current accounts and savings accounts. If they do, ask them to send you the form. If they say they do not offer it, ask them to confirm that in writing, and then consider whether switching part of your savings to an account at an institution that does offer it is worth doing. Here's the third arrangement, and this one applies specifically to pensioners who hold cash savings in premium bonds, national savings accounts, or fixed-rate bonds through national savings and investments. NS&I operates under different rules from commercial banks. When an NS&I account holder dies, NS&I will release funds up to £5,000 directly to the next of kin or the executor named in the will without requiring a grant of probate, provided the request is accompanied by the death certificate and a completed bereavement claim form. For balances above £5,000, NS&I will also release funds without probate if the total NS&I holding is below a threshold that is reviewed periodically and currently sits significantly higher than the threshold that applies at most commercial banks. Premium bonds in particular are worth understanding carefully. The bonds themselves cannot be transferred to another person. They can only be cashed in, but NS&I will cash them in and pay the proceeds directly to the executor or next of kin without probate, typically within 12 working days of receiving the death certificate and the completed claim form. Any prize draws that fall in the months following the death while the estate is being administered will still be entered, and any winnings will be paid into the estate. The practical implication for pensioners who hold substantial savings is this. Holding a portion of your savings in NS&I accounts rather than keeping everything in a single commercial bank account means that a meaningful sum is accessible to your family significantly faster than the probate process allows. It will not cover everything, but £5,000 released within 2 weeks can be the difference between a family managing the immediate costs of a death and a family sliding into debt while probate runs. Here is the fourth arrangement. It is the one that applies to people who have already thought about this and who have done something, but who may have done the wrong something. And it catches more people than almost any other situation I come across. The fourth arrangement is the correct use of a lasting power of attorney and understanding precisely where it stops being useful. A lasting power of attorney is a legal document that gives a named person the authority to manage your financial affairs on your behalf while you are alive. It is enormously valuable for people who become unable to manage their own finances through illness, dementia, or incapacity. It is used extensively among older people in this country, and rightly so. But there is one thing a lasting power of attorney cannot do, and almost nobody who holds one fully understands this until it is too late. A lasting power of attorney ends the moment you die. The second the death is registered, the attorney's authority over your account ceases completely. The LPA is a living document. It has no legal force once the person who granted it is gone, which means a spouse or a child who has been managing a parent's finances under an LPA for years, paying the bills, handling the pension payments, running the day-to-day banking, finds themselves with no legal authority to touch the account the moment their parent's death is registered. The account is frozen. The LPA is worthless at that point, and they have to go through probate just like anyone else. The reason this matters so urgently is that many pensioners believe the LPA is their answer to the account freeze problem. They have set it up, they have told their family it is in place, and everyone assumes the money will be accessible when the time comes. It will not be. Not through the LPA. The LPA covers the period before death. One of the 3 arrangements I described before this one covers the period after it. You need both, not one or the other. The steps that flow from this are straightforward. If you have an LPA already registered and in place, the next call to make is to your bank to establish whether a joint account arrangement, a nominated beneficiary instruction, or a combination of the two is possible alongside it. The LPA and the joint account can coexist. The LPA and the nominated beneficiary instruction can coexist, and together they cover the 2 separate periods, the years before your death and the weeks immediately after it, without either one undermining the other. Now let me talk about the specific mistake that turns a manageable situation into an expensive and distressing one, because it is a mistake that is made by pensioners across this country every single week. The mistake is assuming that because a will has been written and witnessed and is sitting with a solicitor, the financial arrangements around death have been handled. They have not been handled. A will is a statement of your wishes regarding your estate. It is addressed to the court and to the executor. It is not addressed to the bank. The bank does not receive your will on the day you die. The bank receives a notification of death. And in response to that notification, regardless of what your will says, the bank freezes the account and waits for the legal process to produce a grant of probate before it releases anything. The people who end up in the most difficult situations are the ones who wrote their will 20 or 30 years ago, named an executor, and assumed the job was done. Their accounts are all in their sole name. They have no joint holder. They have no nominated beneficiary instruction on file. And when they die, everything stops. The executor named in the will has authority over the estate in theory, but has no ability to access the accounts until probate is granted, and probate, which in straightforward cases could theoretically be completed in 4 months, is currently taking considerably longer due to backlogs in the probate registry that have been running since 2020 and which show no sign of clearing at the rate estates are accumulating. The probate registry processed over 270,000 applications in the last full year. Average waiting times at the registry itself, not counting the time to prepare the application, currently run to between 16 and 22 weeks from submission to grant. For complex estates, for any estate where property is involved, for any estate where the deceased held shares or investments or business interests, the timeline extends further. And while it runs, the account is frozen, the direct debits are failing, and the family is managing the costs of death from their own pockets. There is also a fee attached. The current probate application fee for estates worth more than £5,000 is £273. That fee is due at the point of application and must be paid from funds that are not in the frozen account. Many families are not prepared for this, and it adds a layer of immediate financial pressure at exactly the wrong moment. I want to address something that comes up every time I cover this topic, which is the suggestion that families can simply use the deceased person's debit card to keep things running while probate is processed. Do not do this. Using a deceased person's bank card after the bank has been notified of the death is a criminal offense under the Fraud Act 2006. It does not matter that you are the spouse, the adult child, or the executor. It does not matter that the money would legally be yours once probate is granted. Using the card after notification of death is fraud, and the bank's transaction records will show that it happened. In a small number of cases each year, families who have done this in good faith while under financial pressure face consequences that compound an already terrible situation. The correct route is one of the 4 arrangements I have described. The card route is not a route at all. Let me also address what happens to direct debits and standing orders during a freeze, because the answer is not as simple as most people assume. Some direct debits will simply fail, and the creditor will be notified automatically. Utility companies, broadband providers, mobile phone contracts, most of these will suspend service within a short period of receiving a failed payment notification. The executor can notify these companies of the death, and most have bereavement procedures to pause accounts without penalty during the probate period. Other direct debits are more complicated. A mortgage in the deceased person's sole name, for example, does not simply pause. The lender has a claim against the estate and will continue to apply interest during the period the probate runs. An insurance policy that lapses due to a failed direct debit during probate may result in the property being uninsured for a period, which creates a separate problem if the property is part of the estate. A care home that does not receive its monthly payment will begin a formal process very quickly, regardless of the circumstances. These are not administrative inconveniences. They are real financial risks that sit in the gap between the date of death and the date probate is granted. The only way to eliminate that gap is to put at least one of the 4 arrangements in place before the gap ever opens. Joint account, nominated beneficiary instruction, NS&I holdings where appropriate, and a clear understanding of where the LPA stops and the other arrangements need to take over. I want to be very clear about something before I close this out, because I know there is a version of this conversation that ends with a viewer ringing a bank and being told none of this applies, or that the bank does not offer these arrangements, or that everything is fine and there is nothing to set up. Do not accept the first answer you get from a frontline member of staff at a call center. The bereavement arrangements at every major UK bank are handled by specialist bereavement teams, not by the person who answers the general inquiries line. If the first person you speak to does not know what a nominated beneficiary instruction is, ask to speak to the bereavement team specifically. They handle these arrangements every day. They will know exactly what your bank offers and what forms are needed. The same applies to building societies. Many building society members have held accounts for decades and have never been contacted about bereavement arrangements even once. The building society benefits from the account being held there until probate forces a release. There is no incentive for them to proactively tell you how to make that release faster. You have to ask directly. If you find any of this complicated, or you are not certain which arrangement suits your situation, the Money Helper service, which is the government-backed financial guidance service available to every UK resident at no charge, has a dedicated section on what happens to bank accounts when someone dies, and advisors who can walk you through the arrangements over the phone without charging you a penny. Citizens Advice also handles this regularly and offers free face-to-face appointments at branches across the country. There are 3 things I want you to do this week, not next month, this week. The first is to check every account you hold and confirm whether it is in sole or joint names. If it is in sole names and there is someone who would need access to that money in the weeks after your death, Contact your bank this week to ask about adding a joint holder or about the nominated beneficiary instruction. The second is to check whether any of your savings are held with NS&I. If they are, make sure the person who would handle your estate knows exactly where those accounts are, and that the NS&I bereavement process is faster than the commercial bank route for amounts within their threshold. The third is to sit down with anyone who holds a lasting power of attorney over your finances and make sure that person understands clearly that their authority ends on the day you die, and that one of the other arrangements needs to be in place to cover what comes after. None of these steps cost you anything to take. None of them require a solicitor or a financial advisor. Every one of them is a conversation with your bank or your building society that any pensioner can have alone, at a branch or on the phone, with nothing more than your account details and a clear understanding of what you are asking for. If this video has been useful to you, the single most helpful thing you can do is share it with someone you care about who is over 60 and whose accounts are in their sole name. Most people in that position have never been told that the freeze is coming and that it is entirely avoidable with the right arrangement in place before it happens. You can be the person who makes sure someone you care about is protected before the moment arrives, rather than left to deal with the consequences of it after. The description below this video contains links to the Money Helper Bereavement Guidance, the NS&I Bereavement Claim Process, and my previous video on what happens when HMRC takes an interest in the accounts of people who have recently died, which covers the other side of this picture and which every pensioner watching this channel should have seen before that situation ever becomes relevant to them. Subscribe to the channel and turn on the notification bell. The rules around pensions, banking, and what happens to your money when you die are changing more quickly right now than at any point in the last 30 years. When they change, I will explain exactly what it means for you in plain English the moment it matters. I am John Hartley. Take care of your money and take care of the people who will need it when you are gone. I will see you in the next video.